Hello, everyone. Meg James. I'm your executive officer for the Hilton Head Area Home Builders Association, and we are here for another HBA COVID-19 Information Exchange video series. And this is our fourth episode. We have Mike Quigley, a mortgage loan officer with TD Bank, with us today, and we're talking about the lending world. Mike is also the president of the local Mortgage Lenders Association. So we've got an awesome expert with us today, and like you just said, there's changes every day to everything, to rates, to the market, to just the requirements and restrictions on different loans. So what are you guys, I guess, what's your initial go-to when you're talking to your clients and your customers about navigating?
Right. Well, first of all, thank you for having me. On behalf of the Mortgage Lenders Association, we're happy to be here and to help out. As you said, it's just been an ever-changing market, and things are changing daily. So the biggest thing we're telling customers and everybody is just kind of keep in that constant communication with your bank, especially if you do find yourself in a situation where you've been laid off or you need forbearance or help with a mortgage payment. There are programs out there. I do want to differentiate between a Fannie Mae loan and a portfolio loan, because those have different programs, if you will, as far as what banks can do and are doing to help. But the biggest thing is, if you need the help or if you've got a unique situation, call your bank and have that conversation. A lot of people are shy or unwilling to call. Don't be. Just pick up the phone. Expect a long wait, because there are a lot of people calling. But be patient, but be persistent.
Is there any reason why anybody shouldn't, if they shouldn't file a forbearance on their home loan? If it's still business as usual and you're still working and you're getting a paycheck and you don't need it, I probably wouldn't go through that. But no, if you find yourself in a situation where you're struggling to make your next mortgage payment, there's no reason to not call your bank and have that conversation. So talk a little bit about, I guess, how the FHA and the USDA, they've raised the minimum credit score. They've just made some changes. What kind of changes are you guys seeing as of today?
Across the board, Meg, as this crisis has gotten wider and deeper, banks are trying to figure out how to navigate, a recession, job loss, and just minimize their own losses for the future. So there have been some changes to mortgage products over the last couple of weeks. The FHA raised their minimum credit scores from 620 to 640. There's a thing in our industry that we call loan level pricing adjustments. So meaning someone with 800 credit on a primary residence with 50% loan to value gets a different rate than someone with 660 credit and 95% loan to value. So there's been a lot of changes to those loan level pricing adjustments that has really hurt if you will, the fringe borrower, people with lower credit scores, higher loan to values, things like that. There's been some changes to those products. The average consumer, someone who's got good credit, they should feel confident that, hey, there's still a product available out there for me, whether they're buying or refinancing. But it's some of those fringe products have changed. So on the portfolio side, you'll see the banks, because again, by definition, portfolio is a bank's own money. They're not selling that money to an investor or to Fannie Mae or Freddie Mac. So they have, restricted some of those products. Just a few that I'm aware of already are some banks have withdrawn cash out refinances. So if you wanted to refinance your house to pull cash out on a jumbo loan, you might not be able to do that now, or it might come with a higher rate premium. Same goes for like an investment property loan, things like that. So there have been some restrictions to bank portfolios as they try to mitigate their losses going forward.
That reminded me kind of a construction loan. So it sounds like people just need to be creative and maybe go to a different lender and try something out?
This is where I do think it's important to have multiple relationships, because again, each bank views risk differently. So one bank may say, hey, we're not going to do product A, but we will do product B. And if what you need is product B, you have to kind of find that right lender to go to. We have a wide variety of lenders on our mortgage lenders website. You got big banks, you have small community banks. And what's really nice is sometimes they can service different needs. So I would just, maintain those relationships. There are still banks out there doing great construction loans. I tried emailing some folks yesterday, and I haven't heard a lot of changes as far as credit scores or loan to value. Those may come later, again, depending on how much longer this goes on and how deep it gets. But
that's a good point. That was some of my counterparts around the state were worried, just because I think some institutions were no longer doing construction loans, and they're like, okay, we're essential. We get to keep building houses and doing this, but what if people can't get the loans they need to buy or build?
Yeah, and honestly, I've seen that with some of the bigger banks who maybe have a larger construction loan portfolio. And again, they're just trying to assess their risk. But I do think as the country reopens, you'll see those products be available for folks who need to build houses. Couple things, because I heard Matt talk about some of the draws and things on one of your last stuff. For loans in process, I know we're doing this, and a lot of banks are extending the construction period if people do get delays. So again, make sure your builders know this, and they're telling their customers, hey, if I can't get the framing crew out there, or if I'm staggering, subs during the inside of the house, and it's now going to take an extra 2 months, call your bank and let them know. And 99% of the time, the bank will extend that construction period for 2 months or
That's
3
awesome.
months, or, however long they need.
It all comes back to communication. We all just have to constantly be in communication with
absolutely
everyone. That's awesome. Okay, cool. That's a great tip. That was a lot about the products that are out there. What about some changes to the processes that you're seeing?
So we as in banks engage a lot of third-party vendors behind the scenes, whether that's with the credit bureaus, the IRS, verbal verifications of employment. So we've tried to streamline some of those processes. Like Fannie is allowing, in some cases, exterior only appraisals. So an appraiser doesn't have to go into your house. But we are also being more diligent with the verifications of employment. Some banks are requiring people to even write a letter that just says, either I have not been impacted by COVID-19, or here's how I've been impacted, because we're looking at that, continuation of income. One thing South Carolina has not done, which is unfortunate, but it is what it is Georgia had an executive order where they allowed like an electronic notary. South Carolina has not done that. So while a lot of folks are still trying to close loans via power of attorney to limit that interaction with the attorney, they still have to get a POA executed. And, that does result in a face-to-face interaction. But I've told a lot of people that, banks have gone to drive-through only. So you can actually get a POA executed through the drive-through now. So that does help limit some of that interaction. But I would tell people, when you can, try to get that power of attorney done, and don't, a lot of attorneys are waiving POA fees, just to,
that's awesome,
to limit that interaction.
That's what I heard too. I was talking to Heather Baker. She's the president of the Realtors Association this year, and sits on our board as an advisor. And that's what she was saying. So we were talking about the status of getting that legislation approved for our state, but the loopholes are just the ways that folks are able to still make it happen, and they are still making it happen. So it's good to know that that's something they can do just starting through the bank.
Absolutely.
That's awesome.
And then again, just specific to construction, if there are cases where an inspector can't get out to a property, maybe he or she is sick, or once again, they can't get into a house, a homeowner doesn't want them in the house. On those draws, a lot of banks will accept pictures from the builder. Just say, hey, they go in and they kind of do their own inspection, if you will, and take pictures of things and go from there. But
remodeling has definitely seen the biggest downturn of it. We've seen a 14% decline in permits pulled just year over year. But I know the town of Hilton Head at least has gotten pretty creative. They had already started doing some virtual inspections where the inspector is actually in his truck in the driveway, but it's doing sort of a FaceTime inspection. So trying to avoid it or just keep that social distancing. So just nice to see everybody kind of working together, doing what we can. It's not the end of the world. We're looking for ways to make it happen. I think that's really
absolutely
awesome. And this is good information to know that you guys will accept pictures, and draws are a big deal for a lot of our local mom and pop builders.
Now, just again, on the human aspect of it, like I know we went through an experience where, right when this came out, some of our draw specialists were working from home and kind of getting the technology used, making sure, they can get their computers up and access to the systems and that sort of stuff. So, I just tell people, maybe build in a couple extra days on your draw requests if you can.
Absolutely. That was my favorite thing Matt said was just a change of expectation across the board. We all have to be more patient. The fact that the projects may be extended, up to 2 months or potentially longer, it's all for good cause, just to keep one trade on the job site at a time. So I think if everybody can just be patient and change their expectation, that's awesome. But this is reassuring. I'm feeling a lot better.
But another issue, obviously, a lot of folks are very interested in rates. And I will say, I've been doing this since 2003. And even during the financial crisis of 08, 09, I've never seen the volatility that I've seen today. Literally rates moving a half a point within a week, in one direction, and then the next week back the other way. And a lot of that has to do with liquidity in the marketplace. So I know some folks, they hear that, but they're not really sure what it means. But as this, crisis gets deeper, and we do have these forbearance payments, right? So that, a lot of times banks invest these loans with an investor, and we're just paid to service the loan. So if we're not getting payments on those loans, we still have to pay the investors.
Right.
So as that continues, we eventually lose money to offer new products. And in particular, those go back to the beginning, those fringe products that are most likely to go into forbearance. No one wants to buy those. So that those premiums end up going up, which is why, you'll see a big difference in rates.
Okay.
And it's gotten very hard to predict because every time the Fed says they're going to inject liquidity into the market, everyone gets happy, but then it usually comes with delays or strings, or we're just so I think everyone's just trying to figure out where all the money's coming from.
Yeah, for sure.
But it's just definitely been a very volatile time period. I think just the biggest thing, is communication. Again, is that all this can change. It has been changing. And again, banks are just trying to service their existing customers, but also make sure, they keep the money flowing for new customers while at the same time, mitigating risk, because there is a lot of risk out there, again, with the overall economy, job loss, et cetera, et cetera. So going into this crisis, I think people should have, solace in that the banking system was healthy. You know what I mean? It's not like it was in 2008. So, kind of like once we get the virus under control, I think we'll come out of this strong. Whether it's the PPP programs or, the small business, residential mortgage, construction, commercial, all of it, banks are there to help and try to get people through this time period. But the underlying system was healthy going into it. So hopefully that means it's a little bit quicker of a recovery once we get that virus under control. When this first rolled out, a lot of people just thought it was free money. Like, I don't have to make a payment. And that's not the case.
Well, and I think too, for what are you guys talking about for third quarter, I guess, in forbearance? So even from an HBA financial standpoint, we're okay right now, but if we're being smart and looking to the future, the National Association of Home Builders is allowing for a forbearance on membership dues.
Mm-hmm.
For starting now, but we were kind of like, what about in third quarter? State association is just working on a case-by-case basis. If someone needs assistance, then they can, make that happen and figure it out together. What's your outlook? And I know, like we keep saying, it changes daily.
I think kind of like you're hearing from the federal government that when we do re-enter this, it'll be like a trickle versus flipping a light switch on.
Okay.
I think it'll be the same. And I think, those industries where folks are able to get back to work quicker will be better off and kind of come out of the forbearance period and get caught up quickly and then move on. But there'll be other segments that if this thing drags out, they're going to need help. They're going to need maybe a loan modification, an extension on the term. I mean, they'll end up in loss mitigation with their individual servicers and hopefully work through it. I don't think we'll see the foreclosures and things that we saw in 08, 09, but again, that all depends on us getting the virus contained and getting people back to work.
Yeah, agreed.
So.
Well, awesome. I think we probably will need to come back and revisit this and see where we're at.
I would say, I hope not. I hope we'll all be back at work. It is Friday of the Heritage, right? Shouldn't we be at the 10 on 18?
Yes, that's where we should be.
But instead, here we are. So